Hey there, welcome to Principal Profit Traders April 17th, 2025 coaching call. We're going to give a little market update and just from a weekly basis for us day traders, not much going on, but we anticipated that not much was going on because we trade a holistic system that includes a factor called bigger picture patterns. And we talked about how the bigger picture pattern right now was, let me make sure I'm sharing the right screen here. This V sideways, right? Dip, go. And I said that now we're in the sideways phase of the V sideways dip go phase. Now, usually that's a pretty bullish bigger picture pattern. But the problem is that we don't just trade bigger picture patterns or CCIs or support and resistance or what have you in isolation. Everything is holistic. Everything must be contextually weighted against each other, right? So we have a V sideways dip go, but we also now are pushing up into resistance, right? We have just this horizontal resistance here where we've had problems, as well as we can just see a moving average as well as acting as resistance. But really what's happening here is that we have a larger time frame bias that we're pushing into, just from if we're thinking in terms of multiple time frame alignment, right? We have been short term to intermediate term, bullish to neutral, right? We were bullish the last few weeks, then we've been neutral the last week, so it's neutral bullish. But now that we've pushed into this big picture downtrend line, yes, we've popped above it technically, but until we break substantially and hold above it, right, it still could be a false breakout pattern. Not as bad as this. This was pretty obvious once this closed below here. And I said this live that this is a false breakout pattern. Now it has good odds to really go down. And that's when I drew this ahead of time and said we need one more flash crash to get an action reaction principle for a triple bottom that was all called and given real time. Much more confident to go long here on a major daily double bottom that's a swing trade, right? As well as a day trade, right? Day trade swing traders, like I said, if you're a swing trader, we could have just held a runner here, which I am doing. But I did day trade as well on the smaller time frames, and it is absolutely exhausting because even zooming out, right, you should really just be going long at the bottom of the range and possibly because it's in the sideways phase of a bigger picture pattern, going short with the understanding that this isn't going to be have the highest odds for now some giant reversal down to 75,000 again, right? We really think this is going to go up at least to 87.5 to 90 to test that resistance zone above that I have a horizontal box where the 200 moving average is touching. This is a struggle, and I'm looking at a lot of different things here, but there's a death cross here. I don't like that the 200 is crossed above a 50. It is what it is. But I mean, this could be something where it's a temporary thing and they kind of cross again in a few weeks. That's what I would hope would be a best case, but I thought I'd point it out. So just from a trading perspective, it was on a lower time frame, like watching paint dry. And it's zooming out, getting rid of the zones here. It's just obvious, right, that you'd want to be going long here and maybe shorting and exiting here, that kind of a thing. Now, one thing that's developing here is a mature balance, right? Now this is 1, 2, 3, 4, 5, 6, almost 6 days now, if you count this structure, right? Over there. And the thing is that now it's beyond the definition of mature. I mean, obviously it's not a 2 or 3 week giant one, but this is now becoming a week-long balance. We know all balances end in trends. That's just a fact. So I'm betting on an uptrend because of the bigger picture pattern and the fact that we did close above the downtrend bigger picture bias. Now I marked the downtrend bigger picture bias as bearish and the intermediate term bias as bullish and the short-term bias is neutral because we've just been going sideways the last week. The last couple of days to a week, right? The intermediate term has been up the last two weeks, right, after that V pattern. And then, of course, the big picture, the last 3 months, right, has been down. So there is zero time frame alignment. Are we surprised that we're just going sideways right here? Notwithstanding that I've already defined a pattern called V sideways dip go that we learned from Kobe, the legend in the game, right? You're not going to learn that anywhere else. And, if you're really astute with this, I'm thinking V sideways dip go, then we're just going to go long and short for the next couple of days here. But, performance energies can kick in and you can start literally saying, well, here's the low of the day. Now I'm going to go long. Well, really, the low of the day just happened to be in the middle of this trading range. And that was a bad setup that I took, right? In the middle of the heat of the moment, you're in it. You step outside and you're like, what the heck? Well, you try putting pressure on it. It's pressure. Every time you do this, there's pressure on it. So you just got to move on. And, but still defining it ahead of time, right? This was the bull bear. That's what I defined here. And we did hit that. That was a zone that I gave live when I did have the zones defined before I just decided to just zoom out and take away the zones for a minute here. So I'll put them back, but I wanted to just basically show that this was a mature balance now. And it's also now oscillating around a VPOC. Now I have 12.5% in from when I put a resting order. I think it was after this hit, and then I went to bed around this time here. It was like a couple hours. It was like an hour before midnight or so. And then this hit, right? Very easy. You can see this confluence here, and a just nice trade location, right? Rather than taking something terrible intraday or whatever. There was also a short that we did take real time here. We flipped our bias quick. I took a breakout and I saw this test and I'm out of this, right? Flipped my bias, made up for the loss, and went down and hit it up, right? Now, actually, I got out before it was a full loss because I knew this thing wasn't gonna. It was actually above break even with the fees. It was lost, and that's that. But the thing is that I should have held this runner down to here. I think I got out around here. But the thing is about the intraday stuff is that if you do zoom in on these smaller time frames, you still have to think in terms of this bigger picture bias, defining what the bull bear is. A bull bear is by definition something that we have to take no matter what. Even if there's a trend day. Now, this happened to be a normal variation day to the downside because it broke down and it was very strong trending hybrid action sideways to down. Remember, it started here, the trend, right at the open, or 15 minutes after the open, and then it trended all the way down. But by here, it did get to the bull bear zone. So it was exhausted, right? Just from an average true range perspective, we have moved from 86 down to 83. And if we go on the daily chart, that's around the average true range on a sideways day, you're max. That's great, especially so timing of the day. I told you, holistic system, everything worked out. Now, my system that I defined in the channel always works. This isn't even hindsight bias. This is just putting it in and saying, oh, this will work enough of the time over a large sample size to make money. The execution of it's counterintuitive. So, when a setup happens, you have to take it. Whether you win or lost, you followed your system, and that's what great traders do. Now, the way that I put that probability calculation scale, right, you can skip a lot of, like, technically, right, when I faded the low of the day here, which was a loss in real time, this was after basically what happened was, right, shorted this, made money, got out, flipped long, and realized, yes, this is the first key reference area. But am I really that bullish today? Yes, there's a bigger picture pattern. But remember, we're in that sideways phase. And I'm not thinking it has to be like 3 days now. This could be a week, 2 weeks. We could have a giant dip first. Like, there really hasn't been a breakdown. We could break down out of this balance and then the dip happens, right? Or the V sideways dip go pattern could be invalidated. See, the thing about others, gurus and coaches or whatever, and folks that I would maybe look at from a fundamental perspective is I have to distance myself from the fact that they're always trying to be right or wrong. Wow, like accuracy-based thinking. I'm thinking, okay, here's the probabilities, here's the scenarios. I could be wrong. This is a whole different way to think, right? Because then you could put it on your system, not on you, and then the human being can be, protected emotionally from this. Now, during the day when I'm betting real money on this and giving signals, the nerves, right? But then when you catch that bull bear zone, very relaxing now. I have 12. Now, what I did was is pretty cool is that I didn't just keep on 25% when I gave a great exit up here on this double top, right? Now, it wasn't up here again where I felt confident enough to just flip short, but I was like, I'm going to cash in now on this long. There was a run around, but because I'm trading Bitcoin, I have a bot. I can take a half of that 25%, and I have 12.5% on, which I'm okay, like almost getting stopped out here. It was to break even and still holding it, maybe possibly going to cash out soon, but I'm holding this 12.5% for this possibility of a breakout, right? Now, you might be shorting here and holding it for a possibility of a breakdown. I could be doing both, right? My system allows for that. The level that I'm at right now, right, after giving up a wealth management job in 2016 to do this, straight up, the guy was flabbergasted, is because, right, the levels to do this, right, first you're watching paper trading, this consistency, then you're doing different account sizes. Then when you get up to your larger account size, and that pressure comes on. So it's just basically a process that has to do with your own, because I'm telling you right now, the execution of this is totally different than the theory of it. and then you might be paper trading this on some account on whatever, there's platforms to do that, which I recommend you do. Or what I'd rather you do is like put down like $1,000 or something, 500, and trade with a bot. It's like it could be $30 a month for the cheapest bot, and then it's not like you're executing on the same platform you will when you want to leverage it, right? Rather than maybe you might trade the S&P 500, but you really want to trade Bitcoin, but they don't have one. I think they do have one for Bitcoin, but there might be one paper trading one right on Trading View here. I don't know. So, but besides this income producing stuff for us traders, there's also investors and buy and hold guys, which I also am. So Zoom, I don't really see a difference because I'm applying the same system just so everyone knows. Whether I'm day trading, swing trading, or buy and holding. It just depends on the time frame I'm looking at, right? Here's one thought I had. I just wanted to zoom out to this weekly. I went to Coinbase, and I'm trying to determine whether this breakdown is just like a W pattern from hell that's going to go back down to the 60s and 59, or are we seeing what struck me here from a beauty principle perspective is in March 21, we had the top out, right? Before November 21, where we had this overshoot, right? And we had this strong sell-off where we kind of had this very similar to this, right? It looks exactly the same. If I could just, take this part of it and just look at this part of it, it looks pretty good. And it kind of goes up here, which you would hit this moving average and this launching point in directional conviction. It would have like, a pullback, and then this trend would continue, but it's not like it's going to rocket out. It has an overshoot, which this would coincide maybe with, November 21. That would be, Q4. Hoping we can go. So I drew this a little bit more a little bit, what you would call it, favorable, because there might be institutional capital. Even though everyone is saying, oh, this institutional capital behaves differently, blah, 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 blah. That's true, but there's still a lot of people that are holding Bitcoin that are old school, that aren't institutions like ETFs and funds and whatnot, that are OGs that have a lot of this Bitcoin. And they might just start, if this thing does blow up another leg or something, they might then start going into some of these large cap, mid cap, altcoin, small cap stuff. So, I mean, that's the idea, right? So the idea is that, right, this is in May. This is where we are in May. June, we have a horrible sideways summer, right? And then July, we have the breakout. And then so basically this is extended, and it makes sense because, think about how long this took for us to get this trended and then it balanced. Now just think about timing, right? And think about the nature of phases of markets. Unfortunately, everyone likes a trend up market, but most of the time markets are going to go sideways. Think about this phase of it. This was 1 week, 2 week, 3 week. All right, a pullback, 4 week, maybe 5 on that leg, right? And then just think about this: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 action reacts. Bam, so it's like they just go sideways longer. And I'm being generous here because I could just say it's 2 weeks and then this was part of the balance, whatever. Look at this balance. That was way longer than this trend. So balances, markets spend more time going sideways than trending, because the main purpose of markets is to facilitate trade, and you have to have sideways price agreement to have trade facilitation. When you have a trend up or down, it's basically price rejecting value. The value is basically the sideways action around the high volume node. Even though it's super volatile from our perspective, zooming out, it's sort of a price agreement because it's not trending. Now the problem is, we know they all end in trends, we know they all end in balances. Why don't we act on these things? It's because of euphoria. Here was a pretty obvious January 25th double top price pattern in isolation that had this beauty principle that this thing was overdone, had leg count, right? And now we have something where we could get this second leg up. Now, I kind of have this into August 25. I have this one a little bit bigger. Now, the reason I was being a little bit more generous with here is not just because of the institutional thing. There is that's just a really big speculation on that part. But at least there's honesty in extracting a principle to then put in a probability scale that anyone can see. So the question is are we going to get a little bit? I mean, everyone would like a more of a blow off top than this. That's possible now because technically, right, this balance breakout pattern, I know I talked about this balance, but this breakout here is this balance breakout here. So if we move, let's say, let's be a little bit more conservative here, well, around there. If we move 100% of the range this broke from, which is a principle, right? I was even, we could get up to, which this is coinciding with some fundamentalists, around $134,000. Some say 140. That's around that. I drew a little bit more of an overshoot, but the beauty principle looking at this, like if I just basically had a trend line here and just imagine maybe something more conservative, right? You're gonna be scaling back up here anyway, so you hold your runner for your next target, which would be around 132,000. Right? All things being equal, I mean, how price gets there could affect that, right? We're not just like waiting for a target in isolation. I had a professional businessman who was putting together a fund, and he basically was asking me, I need to write this. Can you review it? And he wanted me to basically, they picked out all the coins, they had their allocations. I gave some input over the phone on that. And then what they wanted me to do is they wanted me to specifically write price targets. Like I freaking know, no offense. you know, that's not, I mean, like what I'm trying to say is that right now you might say, well, didn't you just give me 131? Yeah, I did just give you that based on this principle. But then I said, I'm so nimble in my thinking, depending on how we get there, this whole thing could change. So like to be this mechanical where now I have to have this price. I said, what if you have a triple top that is, 1 hour away from your target in your business plan? You're not just going to go out early. You didn't know that triple top was there ahead of time. So there has to be contextual things here, right? So it was kind of a conflict. I wouldn't do it. Wouldn't give these concrete numbers with the idea that they must wait no matter what. That's how these lawyers wrote it. That no matter what, that this fund had to wait till it hit these targets. And I can't, in principle, from a trader's perspective, who's been looking at markets for this long, this intensely, who views it as a performance skill, right? Who's working diligently every day to get better at it, give that for them to make them feel better. That's absolutely ridiculous, right? I mean, a basic principle is okay. Well, you hold Bitcoin, whatever price they got in it. Like, okay, your target is around the all-time high, but I'm like, what if it starts to triple top around, 10 to 15 to $20,000 below that, or double top? You're not going to reduce risk then too, So all these things, right? All we can do is look at these principles, and the main reason really is that Kobe and that Laura Rashke chick that I posted that video are talking about doing these daily calls, or aka your trading plan, when the market is quiet in the after hours, is so you're not in a heightened emotional state. I look at some of the things I did this weekend. I was like, what the heck? Why didn't I just wait for the bull bear zone? Why did I have to get so involved in intraday? I was exhausted by the time that hit. I'm lucky enough. I wrote in the channel that no matter what, I have to put it in because my body said, "Oh man, I'm tired. I'm done." Why? Because I faded the intraday stuff, even though I know not to do that. Just wait for the bull bear zone if there's no time frame alignment one way or the other. So, yeah. But yeah, just 100% of this principle would get us up here, right? Looking at this principle, this could be something where we're going to get this little overshoot, which would take us up to here. I had it more right, and then we start to get the bigger pullback, but. I'm going to save that. And then I want to just take a look at this Bitcoin time cycle weekly chart. Not, this is, I switched from Bybit now, so it's not going to show that beauty principle thing from like 4 or 5 years ago that I just showed you, which is great because this is only going to, oh, maybe it does. It usually just doesn't have enough data. Now I needed to go back a little bit more here. Yeah, I did. So this isn't really showing that, but that's okay. I just wanted to show you this 30 week. I don't want to get married to this 30-week time cycle idea because this thing might just go sideways for a while, and and then we get a bigger balance, and then maybe around here to here is when we get a move out of it. We'll see. I don't have a huge amount of confidence that this could break out of here, but what I showed you on that previous chart, let's just go back to it because right? I like this, right? That we kind of went parabolic, kind of like this, broke down, have something that's like, oh man, we could be a W pattern from hell, or the bigger picture bias will kick in and we'll have one more bigger leg up in that Q4 of this bull run. And that's kind of where we are. And what's cool about this, unlike this pullback from a beauty principle perspective, I mean, really, what was the structure supporting that? This little leg here, which, yeah, granted, it is a major support zone because if you have a pullback pattern in a major uptrend on the daily, that is a major zone. But that's just, in my mind, going to have great odds for a day trade or a swing trade. I'm not thinking here, oh my God, this has to definitely go up now and we're going to have an overshoot in the next couple months because this isn't that as big as what this is just testing. See how this pullback, even though it's quite up, this pullback is actually testing the top of this balance breakout spot, right? So a balance breakout spot, right? The top of a giant balance here, right? It's going to have a larger time frame players that value that or bought there, or right? This was also right here, December, right? So this is definitely so. What I'm trying to say is that you not only is this similar, and even though this is a major zone, this is small. This is a major zone that's so big that we actually could get a really big overshoot, even higher odds than this got. So that's pretty good. So that 100% range principle will take us to this. And that 100% range principle is just based on human behavior and fractals because it works on a lot of time frames. When people double their money, they get really stoked to sell, or more than double at that point. But the idea that this moved 100%, the range it broke from, it gets exhausted on a major level where we could get into a bear market. Now, what I'm going to do next is go to the daily. Okay. All right. V sideways. We haven't really had a dip for an action reaction go. So, yesterday from a candlestick perspective, right, we had this up and then we held back down. I was uncertain, right? But really, the signal today, you should be uncertain and not trade. Unless you're at some extremes and you still think it's like a sideways thing, but really there was really not a great setup where we knew we were going to lean on one side or the other. So the idea was just to hold some capital from yesterday when we did hit that bull bear zone. Now, if it did come back to that bull bear zone again, yeah, I would go long again. You know what I mean? And perhaps if it came up here and did something that I like, I might go short because I'm thinking that this thing is in a mature balance now. But the idea is that, this thing will end in a trend. And since it's in a bigger picture pattern, I'm not, super stoked to go against that. I am betting for the highest odds that it's going to have another upthrust up here where we can get up here. And then it's like, okay, it's game on now. That's at that point, the V sideways dip go pattern could technically be completed. And I would not necessarily now be thinking, oh man, we have to go up now right away. Because now the new pattern that's like, let's say we do get that move out of this smaller balance here. This is the balance on the short term, which is neutral, right? Even more bearish because look at these tails, right? Rising in agony, as the Japanese rice traders would say from the late 1800s. Right? V sideways dip go, but really this is a triple bottom, and we pushed up into it, and now into this. This thing could just be a slight standard deviation away where we were. I mean, we're not above that selling tail yet, really. So this is still 50-50. I have no idea what's going to happen. I think the odds are we're going to break out up here, and then the new pattern is now we're in a giant balance, and we have to test range highs. Like, remember, I have that list of key reference areas. The range highs of a giant balance are a major zone. So short traders will be active. I might even be shorting up there from a day trading perspective. But what I am hoping is going to happen, right, is that if this, boom, 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 triple bottom, V sideways dip go on a smaller level, broke above the larger time frame bias, dealing with this horizontal resistance and potentially a standard deviation away of that larger time frame downtrend line. But the idea is that if we did get that one level breakout, we have a potential now for a balanced breakout pattern. If it does break, then it's game on. Larger time frame is up, and we have a balanced breakout, bigger picture pattern morph, which will take us to the highs of balance up here, where sellers can become active again. At this point in time, I'm not going to be shorting if we get a clear breakout up here. Now, the problem is going for the breakout setup is, what happened to me the other day, which was a reversal. Now, the idea is that, there is times when it can be useful, open drives earlier in the day when there's clear directionality, but, breaking, this was only a couple of days and it was a false breakout. If we get a clear break from here, this is, from February 27th, this is a bigger picture balanced breakout. Time frame alignment goes up because the short's up, the intermediate up, and the big picture's up. And, then shorts are going to be off the table. Till when? Till we get to a huge zone where sellers are going to become active again, which is going to be the highs, all-time highs. This is where this double top was. The thing is that there's no liquidity this week. Tomorrow is a holiday. It is Good Friday or something like this. And then there's Easter coming up, Sunday. So everyone's on vacation. There's not a lot of liquidity, but this is when you can be kind of calm and just get a real sense of where we are. Now, I mentioned on SWE, I got rid of that B and then the pullback. There was this zero line reject that I was seeing for the last couple of days that was maturing. And I pointed that out not because, oh my God, now that we're going to take that as the only reason to go long, because there was reasons that we shouldn't as well, because we think in terms of holistic system. It's just the idea that because there was this zero line reject in the process of forming over the next couple of days, I thought it had lower odds to then form a triple bottom, right? Because of the way that this separation, this made this momentum seem suspect. So I'm not surprised that we got a relief up here, but that doesn't mean that, now this is not a false breakout and then we can come down and have a triple bottom. I mean, there's nothing about these charts that are looking great right now in terms of breaking structure for bullishness. And of course, you could say, oh, the prices. Well, that's a pure DCA guy, level guy. We know that we just have been in a downtrend, and the lowest odds scenario is that we just start being in an uptrend. But we can at least look at previous behavior and see, well, how did price behave? Well, this was March 24, right? And then down, and then just because it hit, around 4, yeah, you could start allocating. But keep in mind that it goes down and then it can go sideways again for a while, right? And then it'll go up. That's the idea. So where are we? This would take us to May 15th. Now there's that phrase, right? That the go away in May, sell something, whatever. But the idea is that in the summer, everyone's on a vacation. But is that always the case, right? Let's see if there was an anomaly at one point. Let's go to Coinbase. Right, March 20, huge systemic risk with the COVID host. All markets crashed, especially volatile, lower cap crypto assets that had, at the time, the President Trump was dissing on it and saying it was a scam. And now, 8 years later, they're invited to the White House. Oops. Silly me. Yeah, right, buddy. March, April, June, right? V sideways. See, even though right, V recovery sideways, dip, not really, little dip here, go, right? And then we're up problems again up here, pullback, right? So this summer was actually a creeping higher summer, summer sideways. And then in July, it picked up here. We had basically sideways action till July. And then August sideways, pull back again. September kind of took off. Summer doldrums crap. But look, 23 really taking off here, right? June, pull back, pretty volatile, and then still waiting for that fourth quarter. Yeah, see, it's still pretty choppy. But you can see, right, when the 200, right, was over the 50, right, we were in a bear. And then when it crossed here, right, even though it's late, this is a lagging or whatever, it confirmed this breakout that we were gonna, right? Now, what I'm hoping is gonna happen is, remember I said that currently our slow is over our fast, our AKA our 200 is above our 50, which is a death cross, which is extremely bearish, all things being equal in isolation. But right, look at this, right? It crossed temporarily and then it flipped and then it really took off in that fourth quarter, October. That's what I think is going to happen. But you just see every single time it's just less violent. This was extremely violent. March, huge first leg up, and less leg, lot less, right? And March 2024 to October, about a year. We have to be realistic here that we could not be getting a recovery just if we just took this out. That would take us to October of this year. Boom, 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 goes up. Boom, boom, boom. Yeah, that would be brutal. But like I said, I'm just comparing March of this year to April when I looked at this weekly chart and we went back to the last bull run. If we want to actually overlap the phases, it's a much more bullish beauty principle than what I just showed you. So, right, a little bit of this. Then this was in July. This could go up here. We have a slight overshoot, comes back down, and then it goes into July, which would be around here. And then we get that big move up. So, but if you see my family just arrived, I got my brother and his kids just came over. They're visiting. So I'm gonna wrap this one up a little quicker than I would have. But hopefully this chart that I showed you and some of these concepts will at least have some principles of hopium. That last chart I showed you with this beauty principle doesn't put us in a terrible spot if we can at least withstand a mediocre summer. The Q4 at the very least is looking pretty good. So let's hope for the best, and we'll take it day by day while also looking at these bigger pictures and seeing how these patterns morph. All right, guys. Thanks for listening, and you know where to find me. Take care.